Welcome back to Pro Education. This is Zed. Today we're going to be talking once more about Fubo TV. I've done a very extensive due diligence in my previous video, so if you'd like to watch that one, please go ahead after this one. I split this video into due diligence and technical analysis. The technical analysis will be up to date on this one, and due diligence, anything I can cover. There's a few little things here and there, but the main thing is to tell you, well, where's the price actually going to move, what is historical with SPACs, etc. Let's jump right into it. So, Fubo TV, live sports and TV without cable. It's come for the sports, stay for the entertainment is the name of the game. So basically, they have all these different channels, live channels, such as BN Sport, BN Sport Canada, Fubo Sports Network, Paramount Network, Game, Fight Network, etc. And so basically, you get to watch all these different different sports or games online, including as well online gaming as well, or online sports. So that is part of the recent acquisitions and recent expansions. Some of the products you actually can get to play it on here is iOS on Apple, Android, Amazon Fire TV, Roku, Samsung Smart TV, Apple TV, and Chromecast, as well as recently, if you watch my previous video, Hennessy TVs, on the different products. I'm not sure if that's how you pronounce Hennessy, but basically they are expanding further on. There's different acquisitions, different prices. I covered all that last time, so if you're watching it from last time, I don't want to cover that over again, so we're going to move on through it. So some of the latest news, I'm just going to brush through it here. If you were to go here, you basically see that Fubo TV is now available on VIDAA Smart OS operating systems, which is also part of the Hennessy TV systems or line. And then they also add Premium Entertainment Network EPIX to program lineup. Fubo TV to participate at the BMO Growth and ESG conference on December 9th. They acquire Balance of Sports as the first step into online sports wagering market. Basically, all the things that I've just literally said. Now, one of the things that I really have a lot of basic hope for is that the former Spotify and Axiom's product head, Mike Berkeley, is now the chief product officer. So I kind of have a little bit of hope for this one to really bounce back hard. Now, in this sense, we're going to be talking about some of their latest things. $465 is the average exercise price for basically the selling by of stocks to shareholders but they're not really doing it as an offering. It's a resale of warrants. So really won't affect the float in the market much as you would expect. They also have voted on a few things here recently, things like election of directors, the company's named executive officer for the compensations, advisory vote for frequency future advisory votes to approve, executive officer compensation, approval of 2020 plan, proposal, ratification form of basically the things you would exactly expect on a normal occasion. Now, one of the latest news that literally came in just today, around 20 minutes ago, is that they're participating in the 23rd annual Needham Virtual Growth Conference on January 12, 2021. And why am I excited about this one is that at least we will have an updated presentation. And if you watched my previous one, you will know that I am very annoyed when there's no presentations available, because it doesn't really show us much about their plan and growth. SEC Filings has a lot of proposed plans, but we need them to pull it out and basically give us a bit more context. And who better to give you context than the people who wrote the plan itself? And that's why I love these conferences. They're able to give us a little bit more insight about their plans. Now, this was all the news in 2020. In terms of 2021, there is no updated news that we can actually talk about other than the conference itself. Now, in terms of archived events, now you can go on and click on, let's say, on the webcasts and all that stuff. I did do it previously, but usually these ones are very much outdated or not even available. So, moving on, we want to look into the institutional buyers. Institution has been still positive. I don't see any significant transactions happening recently. I know Islet Management on the 28th, which is not a long time ago, took a 7.44% stake in this company here, which is bullish when you see an institution grabbing on and buying a lot of, this company you're interested in. That's a good sign. If institutions are buying, then, well, there might be something in there. Insider buyers, nothing significant, nothing really much happened on here. Now, the next thing we want to look at quickly is their price over books and price over sales. But since it's a new SPAC, we're going to brush that off because even they're not available on Yahoo Finance to start with. And even if you go into something FinViz, which is a little bit inaccurate, price over sales would be around 2026. And I'm not sure how accurate that is. So you know what? We're going to just completely brush that off. BMO Capital, they say here they have a downgrade with a price target to $50, and that was way back, I believe, where it was jumping up to $61. So, well, I guess the price point has been met right now, sitting at 24-ish. One thing before I move on forward, this is a very common thing with SPACs. And so, initial run up, you get an initial nice jump, and then a massive jump closer to the ticker date, and then it starts dropping really fast because uncertainty start lying. It's almost like you are basically blindsided about this new amazing idea, and then once things actually settle in, you apply for divorce. But that is exactly what it kind of feels like, right? It's like when you're a kid and you're excited and then things settle. But what we want to actually understand is what point do we actually see a rebound, and that's what we're going to learn from technical analysis. So now into technical analysis. If you haven't done so, please make sure to subscribe to this channel. It helps show YouTube that my channel is worth something here and we're growing. And if you have any feedback, please mention them down in the comments below. If you would like to join our Discord, it's more of a chat room during the day, feel free to do so. There's no pumping allowed. It's just a friendly small community of folks just trading together. Now, coming on towards a one-day perspective, what we get to see here on technical analysis point of view, moving averages are actually off today fully bearish. And when I say that, is that you see the purple line here, that is the 50-day simple moving average. And you get to see it actually dropped in the 50-day average, and that is a bearish sign. The 200 SMA isn't programmed yet on the 1 day just because we don't have enough points for 200 trading days, but 10 SMA is above 30 EMA. That is bullish, but that is the trading action zone where positive reversals are likely. And we get to see it actually drop below there, and that is a dangerous sign. Momentum for the first time has actually dropped significantly below 223, below zero. Try now negative 2.23. That is another dangerous sign. Willing percent R is highly oversold, and it's been like that since yesterday, and we still saw a drop of 13% from yesterday to today. Now, the MACD looks quite negative. It gone negative on the 30th of December and continues to do so. That is another dangerous sign. We need to start to see a little bit of a sense of stabilization. I'm not saying this is a bad stock. Not at all. And you would basically, if you watch all my DDs, I do go in depth about their potential and everything in between. But basically, we don't want to invest into a falling knife. We want to see a little bit of stabilization, a support, a bottom. That is what we're looking for. Now, moving averages on a 2-hour perspective are full out bearish. 30 EMA is above 10 SMA, it's below the 50 SMA. And what you have here is something called the bearish trading action zone, where negative reversals are going to happen. So above the 3161, it kind of escapes that. Think about it as basically the escape velocity in physics if you are into that. Now, the next thing here is ADX. ADX shows in a retraction from where it was above 50. That's where I usually sell. So it's not going to tell you much. MACD looks like it's being sloppy for a few days, that it's actually basically free falling and there's nothing there other than just basically the same trend going on. When things are sloppy on indicators, really it just says the same trend that you're going on right now. It is basically the same one continuing. 1 hour says the exact same thing. You get the 200 SMA on this one, and it's also bearish, really bearish. The Death Star happened on 30th of December. That is a very bearish sign, where the 50 SMA comes from above and crosses the 200 SMA. Now, on the stochastic fast and slow, we're going to cover that in a second. Moving average band here is really disturbing because you're expecting this one to trade at 38.46 in the top, 34.96 in the middle, and 31.47. Volumes, it's not like they've been dropping. They've been steady for the last 3 days, and they're all outflow more than inflow, and that is dangerous. Stochastic fast and stochastic slow is something really scary here because they're all pinpointing downwards. They're all showing basically that there is probably another leg down, and that is a very dangerous sign. What we need to see is something very similar to this one here. It's a little bit of a curve, a little bit off a horizontal line. What you're seeing here is a nosedive on both the fast and the slow, which tells you be careful. There probably will be a bit more blood as we go forward. Now, when I talked about finding a significant support, finding significant level where you can rebuy, here's what I'm talking about. Supports and resistances. We'll start first with Fibonacci retracement supports. 2163 is the current support, and then 907. Significant resistances on the Fibonacci retracements: 2940, 3568, 4195, 5089, and 6228. Now, moving on next, what we have here, we're going to do price line action, try to find significant supports more than we just saw on the Fibonacci retracements. Now, quickly on, this is actually heads, right there, heads and shoulder. And I did talk about it last time that I do expect for it to fall a little bit more, and we are amid that. Now, the quick question is, where is the next strong support? So we're going to do quickly is first on 1 day and then move on to 1 hour. So initially, I expected it to be somewhere around 25 bucks. And obviously, it slid right through there. So what we're going to do here quickly is move on towards the the next significant supports where I expect a potential bounce to happen, okay? So the next one here is at the 22.91. It almost touched that today. I do think that is a very, very strong support. It did have a significance previously in history. Now the next one here, I think 1983, it touched that twice. That could be the next one. And then a really, really strong one, and that is a very much of a historical one at 1549, touched it multiple times. If that breaks up, then I do think that probably 1368, it had multiple points on there. Hopefully it doesn't get to there, but you know, the last resort would be 923. I don't think that would probably be a good point to go on. Now, if we're doing on for the resistances, I'll choose 1 hour perspective just because we get to see a bit what happened more on an intraday level. So we get to see 2588 on there, and then next coming up 2897, and then we're looking at 3022, and then 3268, and then a very, very significant resistance at 3620. It needs to really break this one if it wants to move above there. Another one, 4010, another significant resistance, 4174. I know they're close to one another, but they are significant resistance. Not so much for significant one at 4331, and then if it does break that one, we're going all the way up to the 52 bucks resistance to 5250. So that is all significant ones, and then you have another one at 3609, or sorry, 5609. So it comes to the question to Ed, what do you think is going to happen here? Now, Ed, you know, there was a massive run to 26.58 just for a few seconds. That happened because the news fell. A lot of people probably just bought randomly, or could be even things like algorithms that got stuck, read the thing, and just sent a buy order and jumped the stock price just because of a low float in extended hours. Nonetheless, that's not the question we have in hand right now. Our question is, where do you think we should buy? What do you think we should do? It is definitely a painful moment for people, for the poor souls that bought around the 60 bucks and the 50 bucks. You know, my hat goes down to you. It is painful to see your stock bleed down. I'm not saying this is a bad stock whatsoever. I did explain the potential. I did explain their balance sheets. I did go through a lot of details in previous videos. If you haven't watched those ones, please do so. Now, I do think that you want to keep an eye for the 22.75 for it to being tested once again. If it does test it and bounces right back up, that would be a nice entry. The second entry would be around 2014, around that support. That is significant resistance support before. That's a nice entry. Below 1536, and then if you have to, then probably somewhere around 1385. And I'm saying, see, I said a starter. Second position. Don't go all in at once. Don't average down all in at once. Even though sometimes it works for you, it might be lucrative, but if it keeps dropping, that is significant. Let's say you added an entry at 29.96 and you went all in. Then you missed up the second entry at 25.60. You could have missed the third entry at 22.83. That way your average would be somewhere around 24 and not 30 bucks. Think about it. What do you think about this sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.